Hello everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets. On Tuesday the 15th of November, we've got a fairly sort of mixed outlook on the European markets today. Let me show you. And we've got sort of these moves that have basically seen a bit of dollar correction, I think, which is sort of threatening. But it's interesting that the sterling is significantly now underperforming. Now we've just had out the UK inflation data. UK inflation has come in a lot lower than expected, actually. Really lower than expected. 0.9% on the headline, 1.2% on the core. Both of those missed expectations by quite a lot. But interestingly enough, another chart I can show you is the UK input prices of the PPI. Now this is increased higher than expected, so it's sort of storing up inflation for the future, but for now inflation is still sort of relatively subdued on this on the CPI basis, but it is interesting that core input that input prices has been increased higher than expected. So that is the sort of first bit of data that we got out today. But generally speaking, I think the dollar is slightly looking corrective today. Let me show you a few charts to sort of reflect that. 10-year Treasury yields lower than yesterday, so it's sort of rolling over a little bit. The 2-year Treasury yields as well, rolling over a little bit. The 2s10 spread has also sort of peaked a little bit. The dollar index has sort of hit the top of that trend channel and just come off a little bit today. So there is signs that possibly a little bit of profit taking coming through, and you can see that with the euro higher, the yen slightly higher, but also the commodity currency is a little bit sort of stronger as well. So that is coming also with gold rebounding and silver rebounding, and oil also 2.5% on the crude. On that WTI crude price. So these are all sort of marginal sort of dollar corrective moves. Now what we have got is my chart of the day today. Let me actually talk about the rest of the data today, because there's a lot of actually important data. Sorry, you've got German ZEW at 10 o'clock. Let me just scroll down. German ZEW at 10 o'clock. 8.1 is the expectation there, and it's actually it's going to. Oh, here we go. 8.1 is the expectation there, and it's sort of picking up a little bit as the last few months have been relatively stable and sort of improving, but I don't think that's going to do a great deal for the euro. The main sort of data point to watch out for today is the US inflation, which comes at 130. Now US inflation, I've gone too far. US inflation. US retail sales at 130. Now that is expected to be 0.4% on the month-on-month basis, which is again slightly improving actually, because on the year-on-year basis, although Reuters don't show their expectations of it, that would be improving the year-on-year to 2.9, which would be just continuing the uptick in retail sales. So that is likely to be a positive number for the dollar if it comes through today. And also we've got the Fed manufacturing at 130 here, expected to improve slightly to 3 negative from 6.8 negative, but still you'd argue that that is still a relatively negative number. But as I said, yeah, lots going on economic wise to move markets today. But this is my chart today. This is euro yen. Now we've been in this sort of trading range for the last sort of 3 or 4 months, and that trading range has come to end this dotted red line downtrend, which is has been intact since sort of February really, but the big main downtrend still is intact, and that is currently around 120. But this sort of trading range that we've seen for the last 4 months is certainly an improvement. Now the big resistance comes in at 1845, I think it is. 1845, which is this one here, which is the July high. If you break above that, then that is a big proper base pattern. Now bear in mind that on dollar yen you've already completed that base pattern, so euro yen is playing catch up to a certain extent, but breaking above 1635 is a key move, I think, near term. That sort of confirms the improvement. You've got the momentum indicators, which are increasingly positive as well. You got a close above 1635 yesterday on just a handful of ticks really. But that's continued today, 1685, as you can see on this hourly chart. The last few hours have been improving. And you've got the momentum, which is increasingly positive as well. You've got the succession of higher lows on this chart as well. So it is an increasingly positive chart, and if you can sort of hold that move and continue to push higher, I think above this reaction high of 1710, I think that would be a sort of confirmation of the breakout, and then you'd be testing 1845, which is then the main resistance. So the improving outlook on euro yen is continuing, and little corrections are being bought into. You've got the minor support obviously now around 1635, but also sort of the reaction low that you've got today, which is 1605, and then a few sort of higher lows, 1625 from Friday, yesterday's higher low around sort of 1675 as well. So a few levels for you to work with there, but certainly improving outlook on euro yen, which generally speaking would sort of allude to more positive configuration on the markets as well. So I wish you good luck in your trading today, and I will speak to you later.